Hello there. My name is Dean Anderson, Commercial Director of Case Dimensions, and we're here today to have a quick podcast about a title we've called Bridging the Cyber Risk Gap. And today I have Martin Flanagan with me, who's Corporate Account Director in Arachas Corporate Brokers. They specialise in financial lines insurance, which includes cyber. So the opportunity today is to talk about two sides of the coin. It's the IT side and the insurance side. So welcome, Martin.
Thanks very much, Dean. Thanks for having me.
Not at all. And what Martin did here is we had a quick discussion with him and we said, let's have this chat about the fact that you're on one side and we're on the other. We're the guys who are trying to prevent cyber incidents and you guys are the guys who are insuring it. So that's where this came from. And the white paper we put together delves really deeply into that topic.
Mm-hmm.
Okay. So what we're going to do for the audience today is that the white paper that you can download after the webinar, the conversation myself and Martin are going to have is followed up with in more detail in that white paper. So if anything you hear that piques your interest, definitely download the white paper or of course send in some comments. So Martin, I'm going to start today just with the obvious one. So cyber risk.
Mm-hmm.
It's in the news nearly every second day. From your perspective, you deal with the board level, you deal with CFO, CEO, COO.
Mm-hmm.
What's their change in have you seen a change in how they're reacting to this idea of cyber risk?
Yeah, I think certainly over the last 5 to 6 years, there's been a fundamental shift in terms of how boards, CFOs, CEOs are viewing cyber risk.
Okay.
I mean, if you look at it a few years ago, it was certainly one of those topics which a lot of businesses just felt that happens over there.
Yeah.
That happens with the multinationals.
Nothing
that
to do
happens, exactly. That happens with your Googles, your Metas, all these larger companies.
Yeah.
But you can see now that's very, very different in terms of how they're approaching conversations around cyber. And I think what's prompted that is that, you can set aside the HSE, all those large scale cases we've seen over the last while. It's now becoming a topic amongst their own conversations with other CFOs and other businesses that it's much more prevalent an issue than it ever has been.
Okay.
And if you look at the responsibilities that board members, that CFOs, that CEOs have, it's now an intrinsic responsibility to ensure they are protecting against cyber risk, given not only the financial loss you can suffer as a result of a cyber attack, but also the reputational damage that can occur. You look at the potential as well for compensation claims for data breaches, and those compensation claims are enshrined in GDPR.
Yeah.
There's a whole host of issues now which are affecting the board level of every business. And definitely, to answer your question, it is certainly a bigger issue than it ever has been for board level.
Okay. And I think most of that is, and look, we're seeing that too. So we typically would have dealt with IT managers of clients who are looking for kind of an IT support. But more than ever, I've been in discussing these kind of conversations with the board, as a subject matter expert. Like, don't even start about AI. Let's not even go there. But so I think, and sometimes I make it really simple. I'm like, it's easy to see why you would insure a building because you can see the building. If the building's on fire, you can see that.
Yeah.
Cyber risk is a challenge because you can't see it. However, what we try and echo, and what you obviously echo, is that if you actually look at your typical business, like a solicitor or even construction, there's not one of these businesses that don't rely on something as simple as a PC and email to correspond. And if it was back in the 90s where that email was sitting on a server, hit what we call under the stairs, all was okay. But everything is now, the reason why email and communication is so prevalent because it's cloud-based. But unfortunately, that's what brings the risk.
Absolutely. And it's one of those things as well. I mean, we often talk to certain businesses, it could be building contractors, for example, who will say, well, sure, I don't have a cyber risk. But then all you do is ask them a question, well, do you send an email with an invoice? Yeah. And there is your risk. There is your risk. So, and it's an interesting when you mentioned about solicitors and the professional services. If you look at the statistics from a few years ago, professional services would have been the number one targeted area, say from a cyber claims perspective.
Yeah.
But when you look at the spread of claims now, it's much more even across manufacturing, retail, professional services.
Okay.
And what I think that demonstrates is that it's not just one sector that's being targeted. Certainly not from the insurance claims perspective. It's a very wide scope of businesses now. Any type of sector could suffer a cyber attack.
And that's interesting. And then that's the revelation we're getting from talking to like yourself is we talk generically about, well, you know, you need to be covered in case something happens. But you have clear data on the claims being made, which means it was a real incident. And then those trends are much more relevant than what we would say, you know, as in you go, well, this is a fact, this is what happened. So and then things like, you know, there's lots of stats about what we call quiet attacks. And what I mean by that is companies that have had an incident and then also have had to claim, you know, because of reputation have pretty much kept that quiet.
I think from what we can see as well is there's probably a big issue in terms of businesses almost being afraid to claim or afraid to flag that they've had an issue as well because of that reputational damage. But that's why it's really important to, you know, partner with the likes of Case Dimensions and make sure that you have the appropriate insurance protection in place so that the reputational damage is then mitigated by having the right IT protection, but also then the support of an insurer in the background as well.
Okay. Yeah. No, thanks for the prompt there. That's good. Yeah. So I think, so look, it's clear that there's so much evidence that this is occurring all the time. The terrible thing is that you and I have the same foe, which is, I always get upset when people think that a cyber attacker is, if you see a photo that is represented, it's like a guy with a black hood on and he's tapping away in his basement. Fortunately, that's not the case. Cyber criminals are working out of very large office blocks in certain parts of the world that aren't kind of managing this. And they come to work every day, 9 to 5. They have data analysts, they have cyber specialists, all preparing for these attacks. And that's the bit I don't think that it ever gets through still to the typical board. That's what
it's an interesting one, because I often tell the story of, say, how when we're talking to cyber insurers and their claims teams, I mean, they have relationships with these criminals. I mean, they almost know them on their fake first name basis at this point, because it's just their teams across the world who are constantly doing this. And the cyber insurers have specialist forensics teams who deal with those criminals to transfer over Bitcoin or whatever it might be. But as you say, I mean, they're professionals. There are whole office blocks full of these individuals who are targeting businesses all around the world.
Yeah. And look, I think that's a key point, and hopefully the audience gets that that's what this is. This isn't a young kid in a basement with a black hoodie on. This is full organizations with serious weight behind them. Better IT than that company has in terms of tactics.
Absolutely.
And you mentioned handing over Bitcoin ransom, which again is another topic, but that's another fact. It's not even, this isn't even something out of a movie. This is a fact that sometimes the decision is made by the company to actually pay the ransom in the case of ransomware. And for those who don't know, ransomware, someone told me they were trying to explain what ransomware was to their granddad one day. And finally they realized it's no different. It's still something is held to ransom. So in this case, your documentation has been encrypted, i.e. you can't log into it or you can't access it. And if you think removing that encryption if you think the ransom is worth paying to get that back, some businesses have made that decision. Another side story, which is not really on script, but it's the UK government only recently in the last month have broadly announced that they highly recommend that no one pays ransoms. And then that's stimulated another challenge about, and again, this isn't a movie script, but you only have to think of a movie as to, of course you pay the ransom if you want something precious back. But they're saying that funds it, and we're like, well, yeah, it does. But this business wants to keep going, you know. So the option is pay the ransom sometimes, or go out of business.
And it's a good point as well. And it's an important one, because I suppose when you're paying the ransom, there are problems in terms of the legality around it, because it could be contravening anti-terrorism foreign laws in Ireland, anti-money laundering. But as you say, a business has to get up and running. And that, I suppose, goes back to the point that, I mean, in the first instance, prevention is better than cure if you have the IT protections in place. But secondly, then, if you have your insurance protection in place, which covers business interruption losses, which covers additional costs involved in getting your setup back up and running as well. So that's, again, it's just having that holistic approach to cyber risk management in terms of having the IT structure in place and having the cyber protection in place.
And that's today, as you said, it's called the cyber risk gap, because our attempt today is to bridge the gap between cyber insurance professionals and IT professionals, IT cybersecurity professionals. Great. So just kind of pivoting or kind of segueing into what you just mentioned there, the cyber insurance itself and how it, what part it plays in managing the risk.
Okay.
So,
well, I suppose if you strip it right back to what is insurance, and insurance is a risk transfer mechanism.
okay.
So what you're doing is you're paying a premium to an insurer to take on an element of risk that otherwise you cannot pay for or take the burden of.
Gotcha.
And so I give you the example, say you can spend as much as you can on cyber protections, but you can't protect against human error. You can't protect against someone making a mistake or someone sending an email, not 100%.
Yeah.
I'm not saying that you can't have the appropriate protections there, but if someone sends an email out to the wrong individual and it contains a whole host of important data relating to private individuals, you can't protect against that. But what you're doing with a cyber insurance policy is transferring the risk of that to an insurer. So that in the event there's compensation claims as a result of a data breach, they will take on that risk.
Okay.
So that's really what it's about, is transferring risk where you can to an insurer.
And that, in fairness, that's a good point. I feel like I'm back in university, because you're right. Sometimes you forget about the fundamental reason for insurance, because we all have car insurance and we all have house insurance. But then when you want to articulate what that means, it's exactly what you said. You've pooled the risk because you can't afford to rebuild the house or replace the car.
Exactly.
That's interesting. So that's the number one. Now, hot off the press, there is ways of stopping people sending information by mistake. It's called data loss prevention. Give me a shout and we can have a chat about it. But it is the challenge with data loss prevention is, this is my education back to you, is that people have assumed, quite rightly, that email is freely available to send all over the planet, because it has been.
Yeah.
But in fact, that's because there's no controls on it. It's actually the Wild West. And you always talk about, if you send that attachment out, it's gone. It's in the Wild West. Someone can download it and resave it and post it, whatever. That's a fact.
Yeah.
Data loss prevention tries to keep that data inside your environment.
Yeah.
Most people hate it, because it's when it used to be, until recently, maybe 5 years ago, only the big banks could afford to pay for this kind of service, okay? Because it was really expensive. It was ran on really expensive software to manage this. But these days, with Microsoft Cloud or Microsoft 365, it's relative now. I'm not saying it's cheap, but it's relatively inexpensive now to introduce those kind of controls. And what that means is that, and as I said, most staff hate it, because it's the thing that stops an email going. It'll go, sorry, you can't send that email because the attachment has confidential information on it. So and look, again, there's loads of, like, the most relevant incident which was made public was the PSNI incident the year before.
Of course,
where an Excel sheet was sent. You think, how often are Excel sheets sent all over the planet with information that may not be on it? And it's that unstructured data is the danger.
Yeah.
If you log into your insurance system, that's by its nature is controlled.
Yeah.
But I'm sure you've a bit of a Word doc or an Excel doc somewhere with bits of information on it. That's just as dangerous.
Of course. Yeah.
Anyway, that's a side story. So in terms of the just pivoting into what people obviously will look at is the premiums. Like they we've had some feedback that they see cyber insurance as a overhead they don't need, or it's high cost. I presume premium. So give us a background on how the premiums are going in terms of.
Yeah, so I suppose up until about, it was maybe 2015 or so, that there was a fairly, what we call a soft market in cyber insurance. So premiums are very low and there was a lot of competition.
Okay.
And then in and around 2017, 2018, 2019, that began to change significantly and the market began to harden. So what that means is that there's a significant drop off in competition and the rates increased because the claims had increased.
Right.
And just to give you a little bit of backstory behind that, the reason I feel that happened was that all of a sudden there was an explosion of underwriters across Ireland and the UK suddenly writing cyber insurance.
Okay.
Now, if you think about it, you can suddenly, in the space of a few years, go from having maybe 12 providers up to 57 because the underwriting knowledge isn't there.
Right.
So what was happening was that a lot of underwriters were underwriting a risk they didn't quite understand.
Okay.
And as a result, then there was a huge increase in a spike in claims.
Okay.
Now, what we're seeing at the moment and over the last couple of years was a softer market in terms of cyber insurance. So premiums have reduced
Okay.
and rates have stabilized. Now, there's a stabilization there. There's kind of murmurings in different territories that rates are increasing, which can sometimes indicate that perhaps the market's going to harden here as well. And what I would often try and do is, look, as an insurance broker, you're constantly trying to look around corners and see what's going to happen.
Okay.
If the market's going to harden and if rates are going to start increasing, that's when businesses really need to start looking at the infrastructure that they have in place and really understanding the security infrastructure they have in place.
Okay.
So that they're able to demonstrate to an insurer that they have the appropriate and requisite controls there to offset any potential loading on their premium. Because having the right protection is obviously going to demonstrate a good cyber posture to a cyber insurer.
Yeah. And again, I always use analogies to explain IT, right? So you take a car, obviously you get a better premium when you have immobiliser and whatever, anti-theft locks and that kind of stuff.
Yeah, exactly.
So it's the same logic.
Same logic, absolutely, yeah.
And the value is you drive your premium down because obviously the goal, and ironically, it's balancing itself up that the more protection you have around your car being stolen, the less chance that you'll ever need to claim in the first place.
Exactly, yeah.
And you get rewarded by a lower premium.
Yes.
So again, thanks for the university reminder. It's insurance is a market at the end of the day. Like you said, it has ebbs and flows depending on the demand and the claims, etc. So, and I presume, like again, I'm not but everyone knows what they hear in the news, but let's say the impact on insurance after 9/11, for example, that kind of thing. And I'm sure then there's little ripples about like the M&S impact early in the year. Like, is that strong enough? Sorry, is that catastrophic enough to actually impact someone's premiums around the corner?
Yeah, so I suppose if you look at it, I'll give you a separate example to kind of dovetail into this. So with professional indemnity insurance, which is kind of, it's linked to cyber insurance. It covers, say, a fault or in the advice that you give or an error in omission in the advice that you give. Around the time of the really horrible Grenfell disaster a number of years ago, there was a huge spike in claims on professional indemnity policies. And that had a massive knock-on effect for premiums all across the board, which resulted in a very hard market for professional indemnity insurance, which we're out of now, but it was very difficult for a number of years.
Yeah.
Now, there are other factors influencing that as well. But the reason I bring up that example is that whilst the M&S case may not have the same resulting impact on cyber insurance, the worry would be if you have a systemic loss which is replicated across a number of different businesses. So you could have, like, I think the insurance loss for the M&S case is in the region of £100 million. You multiply that by 20. Then all of a sudden, it's going to have a big impact on the cyber insurance market, because all of a sudden, a lot of the players in that arena have suddenly made huge losses.
Right.
If they're making huge losses, they're going to start really looking at the risks that they have on cover and the rates that they're applying.
Yeah.
So they're going to start looking at businesses and saying, well, do they have enough protection here to ensure that we're not going to keep suffering losses into the future?
Right. Okay. As I said, I'm learning that it's, at the end of the day, insurance is a market. What I'm hearing and I'm learning is that we are in a complementary situation, that cybersecurity that we provide is equivalent of locks on cars and anti-theft and immobiliser, but you still need your car insurance. And in this case, we're saying even with your cybersecurity, you still need an element of insurance to cover, as you said, that large risk, the event it occurs.
Absolutely. I think that's the important bit as well, is that it's an holistic approach to cyber protection, that the cyber insurance, I always feel, is an add-on to your IT security team or your IT security providers, because it's providing you with that additional protection, that risk transfer mechanism, but also additional resources that you may not necessarily be able to afford in the event of a cyber loss. And I'm thinking, say, for a business that suffers a really bad attack and it's all over the news, Cyber insurance will give you access to PR consultants.
Yeah.
It'll give you access to legal advice
Yeah.
as well, like experts in data protection law.
Yeah.
So they're resources that not all businesses will have on hand, and if they do try and engage them, it's going to cost you an awful lot of money. So going to cyber, that comes under the cyber incident response costs, and that's often one of the most important elements to cover, I think, in a cyber insurance policy, because they will work in conjunction with your IT team and your IT security providers to try and mitigate the fallout from an incident.
Yeah. And again, that does work well with what we have, a similar incident response mechanism. Lucky enough, we've never had to engage with a insurer's cyber incident response, because our incidents have been relatively small, and also our incident response also refers to not necessarily a cyber breach, but also say a performance breach, like something stops, like the server stops working. That would also trigger an incident response from us. But that's really useful to think about. It's the PR out there, it's the legal advice out there, as well as the IT effort to bring everything back.
Absolutely. It's a really interesting type of insurance cover, because it's not like when you have a fire at your premises and it's just repairing damage, it's fire brigade costs. There's so much more that can happen around a cyber event that you don't necessarily think of. There's so many additional costs involved as well that businesses maybe haven't thought of in terms of business continuity planning and strategizing in the event of a cyber incident.
Okay. Interesting. No, thank you for that. So let's move on slightly to the assessment. So an insurer, like how, again, for the audience that may have not done this, let's start with the day that a business decides they need cyber insurance, how they go about that, what they contact Arachas, and obviously in an engagement with the likes of yourself, you figure out what their insurance requirements are, and as well as plenty of other versions of insurance, which I not pretend to know, is it gets onto cyber. So so at the end of the day, how does the insurer assess the risk?
So I suppose from the starting point, what we'll generally do is we'll issue a form over for completion to the client. And what that form will do is it'll collect some standard business information and say revenue figures, that kind of thing, which an insurer will use the revenue figures to assess what's the potential exposure if the company was unable to trade it as a result of a cyber event, for example. But then it will delve into what security controls they have in place. So I mean, if you look at it, like at a minimum nowadays, you need to have multi-factor authentication on your emails, that kind of thing. I mean, that's just a minimum standard. But equally, there are further questions they go through and see if are you using an internationally recognized cybersecurity standard like NIST, for example. Things like that an insurer will look at. Or, are you using an IT security provider who does use a similar security framework to see that there's a structured and methodological approach to cybersecurity, that you're not just doing it ad hoc, that you're not just paying whoever for your firewall and not really delving into the full security infrastructure of your business.
Okay. And that does segue nicely into definitely where we've kind of come across insurance is, it starts with a questionnaire that most businesses go, oh, here we go. Right. It's 25 pages long. It's asking things that the CFO or COO definitely don't know about. This is the terrible thing, is that it also is asking questions that even if you have an IT manager or an IT administrator, which would be quite common in smaller businesses, the guy who's initially come in to fix PCs and install audio visual and stuff, and all of a sudden he's been tasked with assessing cyber risk. And when our alarm bells go off, and this ultimately our clients now come to us, so we're the experts. And what I mean by that is that questionnaire is difficult. It's a technical questionnaire. And you mentioned NIST, and no one out there probably is bothered about NIST except myself and Martin. So NIST is actually it's an institute in the US, the National Institute for Security and Technology, part of Department of Commerce, I believe. But they have issued a cybersecurity framework standard, which again is really, really big. And over the years, that's become best practice, global best practice.
Yeah.
So now what happens is when we look at expectations of insurers, expectations of industry regulations such as NIST 2, DORA, all these things, mostly what my team look at is you look under the hood and you go, this is NIST. And what that means is that they've interpreted the NIST cybersecurity framework as the best practice standard. And some are more obvious than others. So some of the questionnaires we've completed literally follow that structure, that NIST. And again, this is a total separate subject, but it's broken down into sections such as identify, protect, detect, respond, and recover. Yeah. So the hint is in the name. You know what you have. You know when it's been breached. As in you can detect that you've been breached, because that's another story where here's a fact that there's a huge amount of businesses out there that have been breached and the current cyber criminal is in what's called sleeper mode. Yeah. So they've already got access to your systems, usually by something as innocuous as a email address with a soft password. Yeah. Hence the fact MFA, which is, I always am interested with words that non-IT people know. Yeah. You know, even my wife knows what multi-factor authentication is. Everyone knows out there what it is. As if you log into your bank now, you will get a text or a challenge to also produce a second authentication, hence the name, multi-factor, to prove, because it's very simple. It's assuming that if you're a cyber criminal and you have hacked someone's email, you also don't have their phone. Yeah. So I can't remember the numbers, but the permutations of chance of that happening just are much higher. Yeah. That's what MFA is for. Yeah. Yeah. And I'm not explaining that very well, but basically means is when you try and log into your bank, sends you a code somewhere by email or whatever, and you have to reproduce that code. Yeah. So that's two-factor authentication. But that's so detection is a key one. Yes. And then the stuff that you hope you'll never have to use is response. And then the big one is recover. Of course. Yeah. So that structure of NIST is what it's all about. So that brings us on to what CASE do as a secure IT provider, as opposed to just an IT provider. We bring our clients kicking and screaming towards a NIST standard. Okay. So we take on a client, and again, when some IT providers will say everyone's different, and everyone's IT is a different requirement, we say no. These are all the same. Okay, and everyone needs to be adhered to this standard, or there's a risk. Again, to use the building analogy, you know, there's a set of industry standards on how to build a building so it doesn't fall down. That's what NIST is for cybersecurity. Yeah, you're not allowed, as you know, go and build a building any way you want. That's the good news, is that CASE speaks the same language as insurers who are trying to assess risk. Yeah. And I think that says it all. And then for further regulation in your industry, so the Digital Operational Resilience Act, which specifically aims at financial institutions, is under the hood. Yep. You do NIST, you're practically there. Okay. And any other regulation you can think of, not NIS 2, NIST 2 is the one that's coming out now. Similar challenges, but similar protections. Yeah. Yeah. So in terms of when that questionnaire comes back, I presume you see these. Would you be in receipt of these questionnaires? Do you look at them? Do you challenge them?
Well, typically what I actually do when we get these questionnaires, and I think this might differentiate Arachas in terms of other brokers as well, is that there's absolutely no value in sending a form to the CFO and complete that and send it back to me and then stepping back. I think what we do as brokers, and what's really important to do, is to meet with the CFO, meet with the IT team, meet with Case Dimensions as well, if it's yourselves who are providing the IT security, get on a Teams call, and just, because there's elements of that form that everyone's going to have a part to play in completing, right, in terms of being able to inform the insurers appropriately about what's the best answer to that question. Right. So it's not a matter of just sending out the form and taking a step back and leaving it at that. So I personally and the team like to be very involved in that, because although I'm not an IT security professional, I don't have the knowledge you do have, Dean, about IT security infrastructure. I do have the knowledge about the insurance and the terminology that's being used to help guide the client through the process.
Yeah.
And when we get that form back, we have a good understanding as well of what the insurers might be looking at, so we can kind of preempt some of the questions as well. So maybe we'll go back to the client, we'll go back and ask some additional questions before we send it on to the insurer to make sure that we're presenting their risk in the best possible manner.
Yeah. Okay. Which is a classic, for anyone listening, that's not the experience we've had. So I would highly recommend using Arachas, because we have been in the receipt of that questionnaire, which has just been sent and told to be filled in.
Yeah.
So that kind of TLC that you guys are doing is superb. And look, and that's the thing, is because that questionnaire is what goes back. And I'm guessing that this happens less in your experience, because you guys take that time. You can't just fill that out and just half answer it.
No. And I think what'll happen then is, Dean, if you do that, say you get a form back, if the broker doesn't really look at it and they send it over to an insurer, and the insurer is looking at it going, well, half the questions aren't answered, so they don't seem to understand what this question's asking.
Yeah.
Why would that insurer then turn around and go, well, recomplete it and send it back to me, and then we'll send you a quote? You know, if I was an underwriter, I'd probably just go, well, if they weren't really too concerned with completing the form at all to begin with, they don't really seem to understand what their risk is, I don't really want to underwrite this.
Right.
So that's why it's important just to be able to present the information as best as possible. Like, I have an example recently of a client where they're launching a particular type of software soon as a service for members, and we've had multiple different calls in relation to this before we ever engage an insurer to make sure that we have all the information we need presented the best possible way, so that it makes it so much easier for an underwriter to go, well, actually, you know what, this is a great risk. To get the best possible result.
Okay. We've seen the questionnaires. We were in a couple of situations where we've seen the effort of filling out the questionnaire the previous year. Then we were like, well, what was happening here? Because between you and I and the audience, it's lucky they didn't have to claim that year, because a lot of what they had said was not right. You know what I mean? So I assume so if something's incorrect and does get assured, which wouldn't happen to Arachas by the sounds of it, does that invalidate claims?
It can do, and because it would be deemed misrepresentation on the form.
Okay.
So it may not be fraudulent misrepresentation. The client may have tried to answer it as best they can, but when, that's why I don't like clients to take a chance in completing what is quite a technical form.
Right.
If you don't really understand what's being asked, don't ask the question, because there is the potential then that claims will not be paid, that claims will be declined.
Which is ultimately the most catastrophic situation.
Absolutely, because
you think you're covered and you're not.
You're paying a premium, you think that you have the insurance there, and then when it comes to it, a claim is declined. And that's what we want to avoid at all costs.
Okay. And again, to promote our services, that's something we do for our clients. And we talk about being audit ready, which includes questionnaire ready. So we don't just talk about it or figure it out because the questionnaire came out. Our systems are delivering against that questionnaire, whether it was ever challenged or not. So we call it audit ready. So in terms of the value of investing in a cybersecurity framework, or that you go with an IT provider that aligns to that, do they see a benefit in their premium?
So I suppose it's difficult to say that your premium is going to drop by X percentage, right? And especially now we're in a very competitive market in terms of premiums at the moment, as we've alluded to earlier. But equally, if you don't have that standard, if you don't have those protections, it will have somewhat of a premium impact. It's going to have to be. Or what will happen is the cover may be limited. So while they may not, they might give you a premium that's the same as the company next door who has much better IT security in place.
Right.
But then when you look at the policy, it could have several endorsements on it that's actually restricting cover in respect of X, Y, and Z.
Okay.
So it's not just the premium that you could be concerned with, it's that the cover that's being afforded to you is significantly limited. Because you don't have the requisite controls in place that the insurer wants to see.
Okay. And that's not just the value of that cover. It could be something like PR is excluded or
Exactly. It could be something fundamental to that business that the insurer has said, well, they don't have the requisite controls in place. We're not going to cover these losses as a result of that.
Right. Okay. So yeah, and it's never as simple as you do this and you get X off, but ultimately you're getting a far superior type of cover, and that's rewarding you for the cyber efforts you've put in.
And that's what the aim will always be, is to just get the best possible cover that's available at the best possible cost.
Okay.
And that can always, not always be achieved, but the best way to achieve that is by having those controls in place and using those types of security frameworks.
Okay. No, good point. Let's just move on to just a slight different view, and it is this is the first time an IT provider and insurer have spoken in the room. What's your role in a claim? Like, are you an observer? Like, have you? Is it okay for me to ask you? Have you had any experience of how a company's IT provider has been in a cyber attack situation?
Yeah, I suppose it sometimes depends in terms of how involved that company may have been, or the level of IT security they're providing. Because sometimes what'll happen is that companies can maybe think that their work is being questioned as a result of a cyber attack. That the insurer is questioning the structures that they had in place, which is not necessarily the case.
Yeah.
So sometimes a provider can get their back up a little bit because they don't want an insurer stepping in and questioning their work, which isn't what's going on.
Right.
An insurer wants to work with that provider to try and mitigate and prevent any further damage from happening.
Right.
But more often than not, I mean, providers are very open to engaging with insurers because it's in everyone's interest to try and pool resources to make sure that you're getting that company back up and running as soon as possible, and mitigating the potential for further loss and risk down the line.
Okay. Well, look, from our perspective, from my industry perspective, you're right. Other IT providers who may not have secure IT in their DNA, the usual response is, "Oh, the client wouldn't pay for it."
Yeah,
and we see that, and that's why sometimes we're quite forceful with our our standards. Is that I've never done this, but we talk about waiving a risk.
Yeah.
So the example is there's plenty of IT providers out there who maybe the company are tight on funds or don't see the value of spending on IT. Yeah, put it this way: if you don't have a budget line of IT in your if you're just paying ad hoc, when a computer breaks or whatever. But we have had responses. Oh well, we proposed cloud backup or we proposed MFA, but the client decided he wouldn't pay for it.
Yeah.
That's our most common situation that we've experienced from other providers, is that, and then our argument is we have to protect the client from himself, and that's where we go. So we are kind of, me personally, I can be quite forceful with sometimes I'll be challenged on a price and I will absolutely challenge back on the CFO in terms of the risk. So
no, it's an important one as well to challenge that as well, because I think you're trying to get the best result for the client. You're trying to make sure that they're protected as best as they can be as well. Yeah. And you do need to challenge clients on that. And you need to be clear in terms of what protections you should have in place, and the same as with the insurance as well.
Yeah.
And you asked the question as well about how involved we are with the claims.
Yeah,
I think it's really important for the broker to be very involved, rather than taking a step back. And the reason for that is, and we're just kind of going a little bit off topic, but it's when it comes to a cyber event, it's not just cyber insurance that could be triggered. There are other policies that could also be triggered as well. Right. And just thinking of management liability insurance.
Right.
So that's directors and officers insurance. Right. There's a potential there, like if an officer of the company, if the head of IT could be deemed to have not carried out their duties appropriately, is there a potential there for directors and officers policy to be triggered if claims are brought against the business as a result of that? So it's just to keep that in mind, that it isn't, keep in mind for the audience rather, it's not just a cyber insurance policy that could potentially be triggered in the event of a loss.
Multifaceted.
It could be all over.
Yeah.
And that's why your broker really needs to be on the ball in terms of reviewing the covers that are in place and making sure that the requisite insurers are notified of the incident. Because again, if you notify too late, there's a potential then that their investigations could be prejudiced and a claim won't be paid. Yeah. So a broker has to be on the ball and really engaged.
Interesting. Yeah. And like it's complex, and then like no one wants it, but when you have to fess up to it when it happens, because it's, as you said, even to recover in any short period of time is important. And look, again, for the audience, the one I'm harping on about is cyber awareness training for staff. It's telling you, won't be uncommon, and maybe there's some directors out there, no one is paying for it because they see it as a cost and they see it as an add-on cost that they don't need. I'm saying now, forgetting about the technical side of stuff, is it's a fact, and I think this might be supported with claims about where the initial breach happened. It still continues to be human error. And so everyone has heard of the word phishing. Basically just means a fake email to try and get you to do something else. Everyone has heard of the cyber criminals. This isn't a technical thing. Sometimes they use what they call social engineering, which is they ring up a help desk. I think they said this on the podcast before, is for anyone out there, please do this as a test. Ring your IT help desk, say who you are, and see, do they question you? You know, when you ring a bank and they ask you your name and your address and your date of birth. Every help desk out there should also do that if they're looking to reset a password. Because it is still one of the most common entry points for a cyber criminal. They pretend to be the director of, and also they also pretend to be someone quite high up. So the IT help desk go, oh, this is the CEO. I need to, he's on holidays and he needs a new password. That urgency and that social pressure is what cyber criminals use to get at these.
Absolutely.
So cyber training, please invest. So let's just quickly move on to another topic, which is, because I hear you that on question 5 it talks about your Arachas' goal is the most cost-effective premium for the best type of cover. But most people just talk about the amount of cover. In our experience, we bid for government tenders, and one of the prereqs is X value of cyber insurance. We've seen a move that 1 million was typically standard, and we've seen a shift towards 2 million. So I suppose with that figure in mind, what does that mean, having 1 or 2 million worth of cover? Like, is that valid? Is it enough?
I suppose, I mean, it's probably where a lot of businesses start from in terms of buying cyber insurance. Is, okay, we'll just take out 1 million for now and we'll see if we need it. That kind of approach is often taken. I mean, as a broker, you often think, well, how long is a piece of string? Because a cyber event could have catastrophic impact on a business. There's been recent incident where, relatively small business were impacted by a cyber event, and that loss, I think, is now probably going to be in the region of 700,000 or 800,000. They had purchased, I think, 1 million of cover. Now that was a business who thought that they had way too much cover in terms of having 1 million, but their policy limit is almost going to be breached at this point. If the policy limit is breached, the losses thereafter are the business's losses. So that's just an example of a small business who thought they had enough cover, but it's, there's a possibility.
And when you say small, what's a small business?
So the revenue, I think, was maybe about 1 or 2 million.
And there were 30 staff or something like
something on those lines. Something on those lines.
And without going into too much detail, but what made up that cost of 800,000? Because I'm just hearing you're saying about
I think
or whatever.
I suppose the starting point was really the security infrastructure they had in place wasn't adequate.
So it all had to be
all built up again. They lost, the systems were down for weeks. They couldn't get back up trading again, weren't on the cloud, whole host of issues. There was legal costs involved as well. Suppliers were impacted, so supplier claims were made against them. And so it just very, very quickly turned into a significant issue for them in a very short space of time.
So what I'm hearing, a couple of things is, if you are in a situation, the first spend you have to do is to bring your IT up to a certain standard to get it back up and running again. Which again, I'll obviously promote that comes out of the box, if you like, with Cased. But I've always tried to wonder what the fees are, and you're saying legal. So you're in that classic situation where bringing more business in is severely stopped because I don't take anyone, taking a real estate company. A real estate agent, their estate agents can't access their email, so customers go elsewhere, for example. So while they're losing business, then as you said, you have suppliers claiming on stuff that they haven't delivered on either. So it's kind of You've more money going out and less money coming in.
Yeah.
Whilst you're under
Yeah.
huge pressure to get back in action.
And I think a good example of it, and it's a very extreme example, is what happened over the last few weeks with Jaguar Land Rover as well. And I mean, there are estimates now that, you know, in a few weeks' time, the losses as a result of a cyber event, which they've had in their main bases, could be in the region of about $1 billion because of the claims that are going to be made from suppliers and everything else, because they still cannot trade after a number of weeks being offline.
Yeah.
So it's really important to think of those knock-on effects that could happen. You know, it's your supply chain that could be impacted. It's the reputational damage that could impact you. It's the direct financial losses as well.
Right. Okay.
So there's a whole host of different scenarios you need to bring into play.
Yeah. And look, what Martin said there is really important, that of course the big companies get the headlines like M&S and Jaguar, but then we just broke down the discussion about a client who has 30 staff and turns over 1 or 2 million.
Yeah.
It was hit with covered with their 800 grand of cost.
Yeah.
And obvious reasons that they couldn't afford to insure that would have took them down without,
absolutely
would have been out of business.
Yeah.
And look, and that's, I don't like talking about it, but that's a fact. You know, it sounds like a throwaway conversation that someone goes out of business, but that's a fact.
It can happen, and it's only going to continue to happen, because like cyber risk is not going to go away. We can mitigate it, we can try and prevent it, but the risk is constantly evolving. Sometimes I use this term in insurance, it's an emerging threat, which I hate, because it's not an emerging threat. It's very much there.
Yeah.
It's just a matter of how we protect against it and how we monitor that evolution of it as well, in terms of the IT security we have in place and in terms of the cyber insurance that we have.
And I think you're right. That's the immaturity. So when you say the emerging threat, criminality is not emerging. Opportunism of criminality is not emerging.
Yeah.
What this is a lot of organizations have no standards to. They've been able to step into the digital world, send an email, right?
Yeah.
Easy, 5 seconds, you're up and running, right? But you know, so they've joined that world, and then they realize, this is great. My business is running on email. Like my wife now works for a lady who's works out of her home, and everything is done in email.
Yeah.
And you're kind of going, that couldn't like when I try and explain that to my dad from the west of Ireland, he's just like, can't comprehend that you don't go somewhere to work. You know what I mean? So the point is that that's the world we're living in, and so if your business sends an email in a way of doing business with a client, whatever, you're relying on IT, and you're relying on cloud IT, that's how an email gets from here to the other side of the planet. And that means that means you've entered into the realm of cyber criminal risk.
Yes, absolutely.
And then it just comes down to what facet of cyber criminal decides that Jimmy Limited, 30-man company in Mullingar, when you're going to be on the hit list.
Yeah, exactly. Yeah. And that's the truth of it, unfortunately. And it's not scaremongering anymore. It's just the reality of a situation that we live in.
And also, just to echo, I think what you said before about the PR or the feeling of getting breached. This isn't personal. Again, cyber criminals are using vast amount of IT systems to basically spray. You know, and we've all gotten emails over the years saying that we've won the lotto and that kind of stuff. They're just looking for the 0.0000001%. Unfortunately, so in the consumer world, that's maybe someone who's more elderly. Presses on something that they think is legit. So we're just bringing that up to the business world, is that it just takes one of your staff to press on something that they think is legit.
Absolutely.
So I think we're kind of close on that topic, but what you're saying is $1 million sounds like a lot till you spent 800 grand on recovery.
Absolutely. So it's very, very important just to try and assess the business risk from a cyber perspective and see what is the estimated maximum loss you could have in the event of a catastrophic incident. And you'll often find when you really look at that and you step back and review it, could be an awful lot more than €1 million for most businesses.
Yeah. And again, like Arachas as a broker, that's what you do is help assess that risk. And that's an education for me, is that I think maybe the whole audience thinks that cyber risk is just for your IT systems. education from me, it's legal, it's PR, it's recovery, it's professional indemnity, it's management liability, it's sued by your customers, sued by your suppliers.
Yeah.
All of that's covered. So
it's just, so it's so much more beyond just the very straightforward claim for damage to your systems. There's a whole host of other covers out there and triggers.
In fairness, that I've been educated that it's actually it probably being called cyber insurance does it a disservice.
I think so. Yeah.
Yeah. I think what we're hearing is, the incident has occurred in the cyber world, but the costs or the losses are from all over the business, which is as old fashioned as it gets.
Absolutely.
Customers not happy, suppliers not happy. The press are trying to report that you've lost clients' information or whatever.
Absolutely.
Okay. I think we'll have to have a look at our own cyber insurance, make sure. But look, we're starting to close up, and there's no particular where we're trying to bring this to is not necessarily to a big crescendo, but we're just finishing up now. As I just remind is that everything myself and Martin talking about is a conversation that's in our white paper. So like the next thing to do after this is download that white paper, and you'll find everything we talked about in more detail, with references, etc. Like where we've got our figures from, etc. So it's all available. We may have answered this already. Is that you've told us already that having better cybersecurity isn't just about reducing your premium.
Yeah.
And again, I've educated myself that that's all I talk about is reducing the premium. Here's a fact, is that more cybersecurity is probably going to cost more than your savings in the premium. So I'd love to pivot more towards, and will pivot now towards, the type and quality of cover.
Yeah. And that's an important one as well. And you're investing in IT security is not going to necessarily mean that there's a drop off in premium, but what you're doing there as well is preventing huge costs down the line as well, because at the end of the day, you don't want to claim under your insurance. You don't want to have to go down that route. But the quality of the cover is an important one, and there's a number of key providers out there, some great insurers and some great products out there from an insurance perspective, but there are differences. And the one thing I would say is that it's really, really important to be partnering with a broker who understands the differences and understands the cover that's needed.
Yeah.
Because it could have exclusions in respect to that maybe fundamental elements of your particular business.
Yeah.
And one element to cover as well, which I think isn't spoken about enough, is dependent business interruption cover. And it's something which a lot of businesses I don't think necessarily understand. It's also called contingent business interruption cover. And if you are reliant on a third-party company for particular services in relation to IT, so I'll give you an example. Say if you're a retailer and you're reliant on a till system provider, right? Because generally you don't have this in-house, so you're reliant on a third-party company for that. If that system goes down and you can't trade, what happens then? And with a dependent business interruption cover, what happens there is you can claim under the insurance for the losses, as opposed to having to claim against the provider for the losses, because that can be a lengthy process in terms of trying to recover those costs. And your insurer may then look to subrogate those losses against that provider.
Okay.
But you'll find with dependent business interruption, it's often sub-limited, meaning that you don't get the full policy limit. There's usually maybe an add-on of cover for it. Okay. But it's something that should always be reviewed, and maybe look to increase that as well with your insurer and with your broker. But that's just one example.
Yeah.
But the quality of the cover is really, really important. There are policies out there which may not necessarily be fit for purpose.
Right.
And it's just a matter of making sure that your broker is reviewing that with you to make sure you have the appropriate cover in place.
Yeah. So what I'm hearing is, and I'm a big fan of brokers, of insurance brokers, share out to my mortgage broker friends out there, like, because you're getting someone to assess the market for you. Like,
yes.
Classic. And look, I think I'm going to change my conversation, not about the premium. I'm going to talk about the quality of cover. And as you said, those endorsements are the ones you need. So what comes back and you go, grand, it's done. But then, are you reviewing the endorsements you just signed up to?
Exactly.
Hear this a lot. You might hear this a lot. But it's about the misconception about cyber insurance. The bit I want to get across is that the Arachas will have less experience of claims that get denied, because you've done your due diligence around the questionnaire. But in terms of new clients that you've been introduced to, and you obviously do a full insurance review, you get to the cyber insurance bit. Have you had any kind of classic, oh, skip past that, we don't need that? Have you had that kind of?
It happens all the time.
Right.
You do get it all the time in terms of when you're having these conversations. And I suppose it comes back to the fact as well that ultimately insurance can be very much a grudge purchase for a lot of people as well. They're taking it out maybe because they have to, because of a contract, or because they feel that they have no choice, or because of claims. When in reality, it's there. It's, as I said earlier, it's a risk transfer mechanism. And you still have conversations with businesses where they feel it's not necessarily a key element of their insurance portfolio. But it's just, I think there's been it's slowly getting there in terms of the fact that it's becoming a much more prevalent issue at board level as we go back to the very start. It is becoming more of an issue. There's more of an interest in terms of reviewing the insurance cover now than there probably has been at any stage since I've been selling the insurance.
Okay.
I spoke at a conference recently as well, and the question was asked in terms, what are the key risks which you feel are the greatest threat to your business? And I think 25-30% of the respondents had said cyber.
Okay.
Now, a few years ago, I think that would have been probably 5%. Whereas now it's growing and growing, which is good to see. And people are definitely taking more of an interest in terms of reviewing the cover. And even if it's taking out some form of cover, that there's some form of protection in place there. I think that's a starting point anyway for businesses.
Okay. And again, what we learned today is that cyber also then triggers other insurance policies that can help the whole thing. And you mentioned that you've been at, you've presented this risk, like that was you present to industry? Is that kind of, show up at the I don't know,
I've presented for chartered accountants and other different insurance institutions, the Family Business Network and others as well on this topic, and discussed it. Because look, it's, as a broker, we're Ireland's largest nationwide insurance broker. We obviously have an imperative or feel the need to ensure that we're promoting these risks, that people are aware of the risks that are inherent in their businesses and offering solutions to them. And that's an important part of the service we provide, is to go out and give this service, go up and speak in front of a group of people and just explain to them the benefits of having these types of protections.
So, and what you're saying is, and the presentations you've done to kind of an industry audience, there's a spike in interest and there's more people showing up to your cyber risk one than ever before. I'd
say previously the only ones that people attended were when they were CPD accredited or something along those lines, whereas now they're attending other ones as well that may not necessarily get your CPD hour.
Okay, yeah. But
there's definitely more of an interest now than there has been, I think, in a number of years.
Okay. And look, in terms of and thank you, Martin, that's been a great conversation. In terms of closing, we've obviously we can wrap. But is that in particular that you want to finish on? Or is that I didn't let you speak about?
No, I suppose that from my perspective, the biggest worry is that there is still a very, what I would consider a very low percentage of businesses throughout Ireland and indeed the UK taking out cyber insurance.
Okay,
and it's something that we really want to change. And that's not upselling. That's not just trying to get a policy over the line. It's actually just having the protection in place, because I know, and you can see it in the figures in terms of the increase in attacks against Irish businesses over the last number of years, the issue isn't going away. It's only beginning to become more problematic. And when it does impact your business, regardless of size, it could be a one-man band or you could be a team of 500. If it does impact you, the cost can be very, very significant. And having this form of cover in place helps to reduce the impact of that.
Excellent. Okay. Well, look, I'm delighted with that conversation, Martin. Really appreciate it. So the takeaways today are very simple. Like they're obvious what you heard. Cyber risk is important. As a higher, it's much more connected to business risk than I ever considered before this meeting. Having strong cybersecurity is not just about maybe getting your premium down a bit. It's about the quality of cover. And the technical language that my guys love and the insurers love is the NIST cybersecurity framework. So I think that's a great way to finish. And then in terms of the actions for the audience, number one, download the white paper. Number two, if we will obviously share contact details. If you're interested more on the IT side, please give me a shout. We'll also provide details for Martin or some of Martin's team, depending on your company size. We can point you in the right direction. You can explore cyber insurance for you or do insurance review in general, I guess.
Absolutely.
And yeah, thanks for attending, and download the white paper.
Thanks very much. Thanks for having me.
Thanks, Martin.